The US dollar is weakening again, so can we see the dollar yen fall back below 150 handle? Hello everyone, this is Fawad Raza, market analyst for City Index. Today is the 15th of October. Let's get into it. The dollar yen fell sharply on Friday of last week after testing this bearish trend line that has been in place since January of 2024. It formed a big engulfing candle here, although the downside has been limited so far as I zoom in. Support at 151 has held for the time being. This level marks the prior resistance areas as shown on this chart in front of you. And so the dollar yen will need to get below this area before things can turn a little bit more bearish for the dollar yen. Can it do that this week? Well, that's a key question, and a lot will depend on the US-China trade relations and risk appetite. At the moment, equity indices have rallied after Friday's drop, but the situation remains tense and we could well see further volatility in the days ahead. And as far as the dollar yen is concerned, 150 is the next level of support should 151 break down. This area was prior resistance, and we have the 21-day exponential moving average converging there as well. So that will be the next downside target to watch. Below that, 148 is the next level of potential support, where the 200-day moving average converges with the point of origin of the breakout. We also have a bullish trend line converging around that area, so that makes it very interesting should the dollar yen pull back all the way to that area. We'll cross that bridge if and when we get there. For the time being, the key question is, can it now go below 151? Bitcoin prices are starting to look a little bit heavy as the crypto struggles to hold above the 110 handle. 110 is a very important support area because, as you can see on this daily time frame, we've bounced from around that area on multiple occasions. Previously, this area was a significant resistance in the past, as you can see by the wicks of these candles. After breaking out in July of this year, Bitcoin tested this area in August and again in September before coming back all the way down from a record high earlier this month to test the zone, and we bounced. But the upside has been limited on the last attempt as the rally has run out around the 116 area, holding below the 21-day exponential moving average. So at the moment, it's far too early to suggest that Bitcoin has topped out, but this fake breakout above the previous high here and the subsequent downside follow through, which momentarily created a lower low beneath this low, is a sign to suggest that we may have potentially seen a temporary top at least. Now, for me to get bearish, we would need to see a clean break below this support area between 108 to 110,000, where we have previously found resistance and support in the past, and we have the 200-day moving average converging there as well. So any move below that could potentially pave the way for a move down to 100 again, which is the next key level of support. And then below that, it's anyone's guess how far it could fall if things start to roll over. But for the time being, let's just concentrate on this area of support and let's see if it can hold. In the event that it does hold, then that could potentially pave the way for a run towards 116 or thereabouts, and then 120 is the next area of resistance before the focus turns back to 124 to 125 area once again. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.